now it's down to $422.63. Now, Yahoo analysts estimate that in the next 12 months, Adobe Inc. can go up to $581.06. And if it does, that will be a 37.49% increase. Hey guys, today we're going to be talking about a stock that's fell to its 52-week low, and we see it dropping even further. Right now it's down to $422.63, and that stock is Adobe Inc. Now, Yahoo analysts estimate that in the next 12 months, Adobe Inc. can go up to $581.06. And if it does, that will be a 37.49% increase. However, before we want to consider buying it, we want it to stop dropping. And we see that it's still dropping as of now. We've already seen one, two, three, four, five down candlesticks. We want to see if it continues to drop. And in this case, each of the candlesticks on this chart don't represent a day, they represent a week. So we saw a huge drop this week. And then, although they've gradually gotten smaller, we continue to see it drop. We want to see when it starts to move back up before we jump in. But having said that, let's jump over and take a look at the fundamentals on Adobe. But before we jump into the fundamentals on Adobe, we want to take a little look at the app that's presented it to us, and that is the StockSage app. The StockSage app pulls up every stock on the stock market that has 3 or more years of positive earnings in the last 5 years, as well as we can turn on filters to check for other things, such as stock buybacks, strong balance sheets, high profit margins, and even high dividend stocks. But having said that, and having introduced the StockSage app, where it's showing stocks with positive earnings today that fell to the bottom of the stock market, we're going to click on a ticker symbol for Adobe and take a look at this stock. And if we look up here, it tells us what Adobe does. Now, if you go to YouTube, you will find a lot of videos explaining why the stock Adobe is dropping as of late. An earnings report came out that well, they were profitable, but they didn't meet expectations. And also their forward guidance people were concerned about. But you can find lots of stuff on YouTube about that. I'd like to provide analysis on the last 5 years of this stock, where they stand fundamentally. So, we're talking about 2020 through 24. And we want to keep in mind that 2020 was the COVID lockdown year. A lot of companies lost money that year. Now let's start with the earnings. And if we start with the earnings per share, we know we like to see companies where their earnings per share is increasing every year. Or if not every year, maybe it'll skip a year or so, but for the most part, we like to see the earnings increasing, or at least stay stable. Well, in 2020, their earnings per share was $10.94. 2021, it was $10.11. It dropped a little. 2022 was $10.12, went up a little. 2023, it was $11.88. So we had a decent jump. 2024, $12.44. And so far for 2025. Now remember, this for 2025, the year's just started. So this is just a projection. It could drop, it could increase. But so far the projection is 12.36. So the earnings per share right off the bat is looking decent. Now let's look at how this company has done over the last 5 years in terms of their prices. In 2020, it was at $255.13 at its low, $536.88 at its high. 2021, $420.78 at its low, $699.54 at its high. So it jumped up dramatically. Now 2022 sort of moved down again. $274.73 at its low, $575 at its high. 2023, $318.60 at its low, $633.89 at its high. And 2024, $432.47 at its low, $638.25 at its high. Now, let's look at the percentage increases over those years. In 2020, from the low price to the high price, the stock went up 110.43%. In 2021, it went up 66.25%. 2022, it went up 109.30%. 2023, it went up 98.96%. 2024, 47%, 47.58%. Now, for 2025, the projected high price by Yahoo analysts is $581.06. And at the current price of $422.63, that's the current low price. That's where it's at right now. If this stock moves up to Yahoo's projected high price, that will be a 37.49% increase. Okay. Now we know the low price of stocks are constantly changing from year to year. So we can't detect how low a stock is going to fall by the price, but something that we can look at is the low PE ratio. And the low PE ratios can tell us approximately how low that stock is going to fall. And if we look at the low PE ratios over the last 5 years, we see the lowest was 23.33. That was at COVID lockdown year. And that's a pretty decent low PE ratio for that year. 2021 was 41.62. 2022 was 27.15. 2023 was 26.82. And 2024 was 34.77. Now, seeing that the stock was at 34.77 in 2024 and it's at 34.19 now, we could see it possible or feasible that this can be the lowest that the stock is going to drop and then it will move back up. However, we see it was at 27.15 in 22, 26.82 in 23, so we could see it drop to there as well. Now, what was to happen if this stock was to drop to a PE of 26.82 again? I'm not going back to 2020 because that was the COVID lockdown years. So that may have been a little bit of an anomaly. But I'm going to look at the PE ratio from 2023. And I'm going to go to my calculator. I'm actually in my calculator right now. I'm going to say 26.82, which was the PE ratio in 2023. And I'm going to multiply that by the current earnings per share, which is 12.36. And under those circumstances, if the PE ratio were to drop to 26.82 again with this current earnings per share, this stock would fall from its current price of $422.63 a share to $331.49 a share. Meaning what? If you see this stock continue to drop, get out and wait until it starts to move back up before getting back in, because it still has a bit that it can drop. Having said that, let's take a look at some of the fundamentals for this stock. We said it's currently at $422.63 with a $12.36 earnings per share, and a 34.19 PE ratio. They're currently giving no dividend. And the book value very low, $31.98. But I tend not to put a lot of weight in book value. I put more weight in stock buybacks. Are they buying back stocks every year? So having said that, let's take a look at this. And we're going to start with their income statement. Now, this company in 2020, and that was a COVID lockdown year, they made in sales and revenue $12,868,000,000. Of that, they retained $5,260,000,000 after paying off all expenses. So they had a profit margin that year of 40.88%. In 2021, they made $15,785,000,000 in sales and revenue. Of that, they retained $4,822,000,000 after paying off all expenses. And that was a profit margin of 30.55%. In 2022, they had $17,606,000,000 in sales and revenue. Of that, they retained $4,756,000,000 after paying all expenses, for a profit margin of 27.01%. In 2023, they had $19,409,000,000 in sales and revenue. After paying all expenses, they retained $5,428,000,000 for a profit margin of 27.97%. And in 2024, they had $21,505,000,000. After paying all expenses, they retained $5,560,000,000 for a profit margin of 25.85%. Now, Adobe is a technology company, which explains their high profit margins. Most of the stocks in the stock market do not have high profit margins. Maybe supermarkets could be 2 and 3%. You have a lot of manufacturers, they may be making around 5%. But many of those companies don't exceed 10% profit margins for the last 5 years. Whereas this company's profit margins were 40, 30, 27, 27, and 25. It's dropping successively, but still, it's higher than most companies. And that's one of the strengths of the Stock Sage app, is that it looks at all the companies at the 52-week low that have 3 or more years of positive earnings in the last 5 years, and you can actually see the ones with profit margins exceeding 10% or 20%. Notice we have a pretty decent list of companies here. But when I click on this greater than 10%, that long list turns into 6 companies. And when I click on greater than 20%, that long list turns into 2 companies, of which one is our company, Adobe. So now that we've looked at the income statement, let's go down to our return on equity. In 2020, it was 39.66%. 2021, 32.59%. 2022, 33.85%. 2023, 32.86%. And 2024, 39.42%. Now, when I'm looking at the return on equity in these companies, anything that I see above 20%, I consider very good. And this one is above 30% for all 5 years. And when we come to the debt to equity, I want to see it below 200%. It's actually below 100% for 4 of these 5 years. 83.08 in 2020, 84.10 in 2021, 93.33 in 2022, 80.28 in 2023, and it jumped up some in 2024. Not sure if they're preparing for a project. 114.32, which means that their assets, their current assets exceed their liabilities and exceed their current liabilities, and their total assets exceed their total liabilities for all 5 years, which is what we want to see on a balance sheet. Like I said, they don't pay a dividend. They haven't paid a dividend the last 5 years. So the only money you're going to get from this stock is through growth, not through dividends. But all 5 years, they bought back and issued stock, but they bought back more than they issued. In 2020, they sold $270 million worth of shares. And they bought back $3,050,000,000 worth of shares. In 2021, they bought back 291 million worth of shares. I'm sorry, they sold 291 million worth of shares, and they bought back 3,950,000,000 worth of shares. In 2022, they sold 278 million worth of shares, and they bought back 6,550,000,000 worth of shares. In 2023, they bought back 314 million worth of shares, and they sold 4,400,000,000 worth of shares. And in 2024, they sold 209 million worth of shares, and they bought back 9,500,000,000 worth of shares. Now, they had free cash flow for all 5 years, but primarily, when I look at free cash flow, I'm looking at the free cash flow to see if they can actually afford to pay the dividends that they're paying, because companies pay their dividends from the free cash flow. That's why we have this free cash flow after dividends row. So that if this is showing up negative in any of them, you know they can't afford to pay that dividend. But in this case, this company doesn't even pay a dividend. So that's not a factor. But I'll read off the free cash flow anyway for those of you who are interested. In 2020, they had $5,308,000,000 in free cash flow. In 2021, $6,893,000,000. 2022, $7,396,000,000. 2023, $6,942,000,000. And 2024, $7,824,000,000. Now, this company has it's owned by insiders 0.21%. So under 1% is inside owners. Inside owners are those who work for or are part of the company. And institutional investors, 85.66%. Mr. Shantanu Narayan, born 1964, is the chairman and CEO of Adobe, and he became its CEO in 2007, so he's been around for a while. And Adobe is in the infrastructure industry, technology sector. So that's it for our fundamental analysis of Adobe, guys. I hope you have a great evening, and I'll speak to you in the next video.